Hey you there, welcome back to Risk View War, and today we're going to be talking about a beginner video. What is short selling? We're going to be talking about explaining my best analogy for short selling, how I short sell, and also how this can actually make you a little bit more profitable if you're able to go long and short. So let's get right into it. Okay, so what is short selling? Short selling is essentially you're going to be selling and borrowing shares and selling at some higher price, and then you're going to be buying the shares back. So you're going to be basically paying the brokerage back for the shares that you actually borrowed. Now I know that sounds pretty confusing, but it's essentially exactly like going long. It's just the exact opposite. So when you go long, you actually buy low, sell high. And when you go short, you actually sell high and then buy low. So it's pretty much the same thing, right? My simple analogy for this is going to be pretty much this. Stranger comes up to you and says, hey, I want to purchase a shirt. You don't sell shirts, but fortunately you do have a friend that has a shirt shop and he sells shirts, right? So you're kind of familiar with the price that it's going to actually cost for that shirt, right? So you tell the stranger that, hey, I will sell you a shirt for 50 bucks. And the stranger says, okay, fine, I'll take the shirt at a 50-buck rate. Now you go to your friend shop, you borrow the shirt from him without him asking the price because you're assuming it's going to be cheaper than 50 bucks, right? So you bring the stranger back the shirt, the stranger gives you the 50 bucks, and now the stranger is gone. So he's out of the equation, right? So now you have to go back and pay your friend for the shirt that you actually borrowed from him, that you sold. So you go back to your friend's shirt shop, you say, hey friend, I borrowed this shirt of this quality. How much will you charge me for it? Now if your friend says, you know what, I will charge you 25 bucks for the shirt, congratulations, you have made a profitable short trade. You are now 25 bucks richer because you gave him the $25 back and you kept the profit, right? So let's break this down into a way of explaining who's all involved here. So the stranger, which would be the person that's trying to sell a stock at the $50 price, you see the price action, you say, hey, the price action right now is around 50 bucks. I like the price. I want to sell here in anticipation of it going down. The friend with the shirt shop, is actually going to be your brokerage, right? So whoever your broker is, and you're going to actually be borrowing shares from your broker and you're going to be selling it to this stranger, right? And then you will be anticipating the price to drop lower. Therefore, you can buy it back, give back some of the profit to your brokerage, right? So you're going to split the difference. Now, let's just say that this was a reverse. Let's talk about a loser. So same scenario, right? So stranger comes up to you. They want to purchase a shirt. You say, I'll charge you 50 bucks for the shirt, right? You go to your friend's shirt shop. You grab the t-shirt. You come back. The stranger gives you the 50 bucks for the shirt, right? He goes away, and now you go back to your friend and you say, hey, how much would you charge me for this shirt that I took of this caliber? You know what? Hey friend, the pricing has went up on the t-shirts just now, so I'm gonna have to unfortunately charge you $75 for the t-shirt. So now you sold this t-shirt at 50 bucks, but the t-shirt is really worth 75 bucks. So unfortunately, that's a losing trade right there. So you owe the brokerage $25. Now, a lot of people talk about how short selling is so risky that they don't like to do it, but it's essentially the same type of setup, right? You essentially have the same type of deal as you would do it long. Don't try to think about it as a different way to trade. I'm a counter trend trader, so I can understand both sides, but in my head, I'm just a little bit more bearish than I am bullish on basically everything except Tesla and some of these other crazy names that I know that I'm scared to kind of even trade. But let's jump into this chart and I'll show you an example of, it's just like going long. All you have to do is use support and resistance. Let's jump in. Okay, we're in my chart here. We're looking at Novavax. It is a Sunday, so none of these charts are going to be moving, okay? So it's fine if you don't see any movement. We're in the hour chart here. Now, if you wanted to go long, right? Let's just look at a long sell. If you wanted to go long, you would have support and resistance. You would work off that support line, right? So if you see stocks come back into their support line, like you see a support level here, you see a little bit of one here around these edges, right? You see these little support zones here. And so when you see stuff like this, you would say, okay, this is a good spot to defend and get long off. So this will be a good low area to buy to see if we can get back up here in these areas, right? So we can get back up here in these areas. It's the same thing going short. Now, never short at a low spot. Most people think they'll let it go down and let it keep going down and start trending down, then they get short. No, that's how you lose a lot of money doing that. Because essentially when you're shorting, you can lose an infinite amount of money. So if I wanted to get short somewhere down here, right, and I let it run all the way up here, like I'm basically getting blown out. Now going long, like it can only go to 0 and that's the maximum I can lose. This thing can go to an infinite amount of money. If this thing wanted to go to $1 million, I would be in a trade still losing money. So that's essentially why people say it's more risky. But you have to treat it as a long sell as well. It's just the same thing. So if you were trying to buy the stock low, you would buy it on these support levels, right? And then you would anticipate to go higher. If it break too low, right, you would stop out. It's the same thing, right? So let me show you. Same stop. Let's look at a resistance level instead of a support level, right? You look at a resistance level. What do we see? We see a little bit of resistance here. We see resistance here. Okay. We see a support and resistance bounce off right off this line where we were at, right? And then we see resistance again, breaks resistance, goes absolutely crazy. And then you also see the resistance here again, right? And then resistance here again. So let's go ahead and put that as a line in the sand because that's a very good resistance level for this stock, right? So what would you do, right? Well, you would trade off that level. You would go short there and give it a little bit of room, whatever your risk tolerance is going to be, right? You would short off that level because if you short it, let's be a little bit more aggressive. I don't want to be too conservative. If you would have short it, you know, you could probably get this thing 50 cents, $1 in risk to take this whole move. So now when you look at this, if it's coming up towards resistance and it fails, so let's try to zoom in. Let's try to zoom in. This is one of these days, right? It went to this resistance, put a wick off top, went back up to the resistance, put a wick off top, and it failed, right? So if you took this trade and you actually seen it bump and then it bumped again, you could have got short, gave it 50 cents to $1, right, in risk, gave it 50 cents to $1 in risk, and then kept your trade, right? Now, when you see a move like this is news based. I think it was earnings. Oh yeah. So if you look down here, it's got this little E here. That's actually earnings. Okay. So let's just say you see this line in the sand right here, this resistance. Let's just say you were like, you trading this thing throughout the day and it goes up into this resistance. If you would have got short, you had no reason to get out pretty much the whole day to see what it's going to do. And if you really wanted to YOLO trade this, because you would now be in what, $3, $4 per share in the money, you'll be up $4 per share. You could have just YOLO traded this and then watched this after hours and waited for the news to come out, right? And so if you waiting for the news to come out and the news comes out and it goes all the way down here, bang! This is an amazing trade that would have been banged into earnings right off of this resistance, right? You don't want to short. A risky short would be shorting right here at this would be like the lows. This is like holding a support line right here, right? And this is the 5-minute chart. This is holding support. You don't want to short on a support line. This is very important to note. Don't let it trend down and then get short. Like, short it off of resistance just like you would buy it on support and you would defend the level that you love, resist a level that you love as well, right? If it's resistance, don't defend it, sell it. All right, so sell it at that level. Give it a little space. We're in the bear market, rally right now. Give it a little bit of space, and then if it goes to the downside, great. If it breaks that level, see if it confirms the break, and then guess what? Get out. Right? It's that simple. Don't say, oh, it's got to come back down, because you'll have a lot of the times. Let me hop over to something like this, where you'll have like an AppV or something, right? Which is not doing great right now. But if you look at this thing was running in, basically, this is the daily chart. This thing was running to all-time highs. So if you tried to short like a double top here, right? You try to short a double top here, and it broke that level. It confirmed the break. Get out, right? Because now you're just getting ran over. You never even getting that price again, right? And you may get this price down here again, and you may be able to break even, but don't hold through, $60, $80 per share. Like that's unreasonable. Don't hold through $60 per share. Like that's insane. Just get out. If you wouldn't hold something to zero, then why would you hold something to infinity against you, right? So that's pretty much a good explanation on, a simple indication on how I trade, how I short sell, right? It's really not hard. You treat it like a long, right? I feel like this is a little bit easier for me to read because I never know when the bottom is in. I kind of feel like when a stock is going too much, or if it's really, really overvalued, I'm able to gauge that a little bit easier than whether it's undervalued or not, because I really think all of these companies are really just fluff. To be honest, it's a manipulation game. We all know, but that's all into it, man. It's just use it off of resistance. Don't try to short the lows. Please never try to short the lows. Never try to oh yeah, like for example right here, if you see it like, oh man, this thing is getting crushed, like it's going to continue to just keep falling down, why would you short in front of support? Like this is support. Don't short in front of support. I would be defending this level, and if it broke and then it confirmed the break, I'll short it somewhere in this zone at the top again and let this thing really come down into the zone. So yeah, that's all I have for you on that. All right, man. So that's all I have for you today. If you did like this content, let me know in the comment section below. Like, comment, subscribe. I do reply back as much as I can. And as always, follow me on social media at Big Hat Stocks. And I will see you in the next one.